Welcome to Deconstruct Live. I'm Susanna Cavanaugh, and this is Arnaud Karsenti. He's the head of 13th Floor Investments, which has been incredibly active across residential real estate, doing distress, condo, multifamily, single family. And I'll just highlight a few projects to start. So there's Link at Douglas, which is a 4-tower residential project underway at the Douglas Metro Rail Station. There's your redevelopment of City Hall, which is another public-private partnership. There's 13th Floor Homes, which is the home building arm. And you're doing deals outside of Miami too, notably a unique one in Greenville, South Carolina. So lots going on. I wanted to start with sort of a broad question. So it kind of feels like we're at an inflection point right now. You know, we're seeing interest rates come down. We have the election results of yesterday, and there's still uncertainty in the market, clearly, but how is that affecting how you're thinking about strategy heading forward?
First of all, Susanna, thank you so much for having me, and to The Real Deal and everyone else, thank you so much for putting this amazing event on. I think your question's a great one. I think we are at an inflection point. Matter of fact, I think this conference might be the inflection point. Maybe even this conversation's the actual point of the inflection point, in the sense that so much, the last couple of years have had so much uncertainty, so much inflation. There's been obviously a lot of political uncertainty, interest rate uncertainty, and I do feel like one by one, we're starting to really tackle a lot of these issues. Like you said, interest rates are coming down. They still have a long way to go. Obviously, 2 days ago, we had the resolution of the election, which I think is a huge relief, regardless of your political affiliation, that at least it's over. And I think there's just a general sentiment that we're ready to be back. You know, like the world is ready to be back. I think it was 2 years ago, literally on this stage, we were talking about, I think I made the comment that the winter was coming, kind of a Jon Snow reference. And I didn't mean to be ominous, but it was true. I mean, there was just a lot of stuff that was difficult, that was there were a lot of clouds ahead. And I think today we're in a almost a 180-degree different environment. There's just vibrancy, there's energy. I mean, if you just walk outside the halls and just go through the booths, go through the level of just energy in the room, there's a lot. Another interesting thing is, if you look at like the stock market, which is not really necessarily directly related to what we do, but it's kind of an indicator. In like tech stocks in particular, kind of like are at the forefront of that. And when you see them, you see like what the stock market did yesterday. I think it should bolster a lot of excitement and confidence for real estate. We tend to lag them. So I think there's just a great feeling. And I think people don't realize how important that is in our business. If you're a broker and you're selling condos, you need energy. If you're a capital provider or a bank or a lender or an investor looking to buy something or invest in something, you need energy. And that energy is critical. And I do think that we're seeing a lot more of that right now than we have in a while.
Yeah, happy to see my stocks go up yesterday, for sure. Okay, so with your hand in so many different things, let's focus in on 13th Floor. What's the connective tissue there between everything you've got going on? How do you define what 13th Floor does?
So, I mean, at 13th Floor, we really pride ourselves, a little bit like how our name indicates, on finding kind of hidden value. We're not looking to be everything to everyone. We're looking for really special opportunities that we think are really interesting, that we can, not only find and buy right, but also that we can add value to. So whether it's developing a multifamily project and converting a golf course, as an example, in our home building business, or it is doing a public-private partnership like you referenced before, or even building a condominium project on the water, we look for things that have something special. We define special usually with, number one, be strong. Number one, this is my friend in the audience. I just love him. And we define special by, number one, a high barrier to entry. So good locations with high barrier to entry. So in other words, something you can't necessarily do the same thing next door. That's important. We also define it by things that we can add value to. So what can make us, what can we do that's special to the project? If we're just doing what someone else is doing and just copying the competitor or the neighbor, we're not really doing anything that's going to differentiate ourselves. And the third thing we look for is something that really could last. In other words, we're not looking to be in business for just the next 3 years or 5 years. We're thinking about it as, what if we owned it forever? Doesn't mean that we will own it forever, but what if we did? So perfect example is when you build a building, there's a lot of ways you can go about it. There's cheap ways that you can cut corners. We tend to not do that. We tend to think about it as, what if we were building our own home and you want something of high quality, just like if you were building your house, you'd want something that you'd want to live in for a long time. So I think the quality is also the last piece that's really, really important. And we're not alone. There's a lot of great developers and investors in this town who I think build amazing projects. And I mean, frankly, it's a tide that's lifting all boats. So I've always been very impressed by that.
Let's talk about your public-private partnerships, because it is a niche for you, P3s. So you've done a number of them, but the flagship is Lincoln Douglas. Can you give us first a taste of what that project is? Because it's not just apartment buildings, it's also the train station there, right? And why did you get involved in that deal? What did you like about it?
Well, Douglas has definitely been a big poster child for our company. It's kind of been a turning point and kind of changed the landscape of our enterprise, in the sense that it was the first large public-private deal. It was also just a very large deal in general. And frankly, at the time, we were a much smaller business, so we took on something that was quite daunting, but also very exciting. The key word in the public-private partnership is the partnership aspect, and I think that's what people don't quite understand or don't realize, is that when you buy a property from someone, you have a closing, and then you more or less don't see them again. They move on, you do what you want with the asset or the project. When you form a public-private partnership, you're basically, by definition, living with that entity in unison for in some cases forever. So that's very important, because you need to really start taking into account each party's objectives and their incentives. It's not as simple as just getting the best price or getting the best terms, because if in our case, we do a lot of deals with cities and counties and other municipalities, and what they want is not necessarily always the same, doesn't always line up with what a developer or an investor might want. But the key and the art of these things is finding the intersection between them. So perfect example in Lincoln Douglas, the real incentive the city has, the county, is to increase ridership and to increase workforce housing and to increase infrastructure for the county. Our incentive is generally to build real estate that at a yield that is commensurate with the returns that we're looking for. And so we have to find how to do that. And so in the case of Douglas, what we found is that by building really efficient housing, we were able to do workforce housing, and so one of our towers in a very unique way. By increasing our density, we were able to get more riders on the metro rail station. So we actually have documented data that demonstrates that we've increased ridership by way of building more housing at Douglas. And there's many other examples, of course, even including things like parking and things of that nature. So the devil's in the details. It's definitely a roll up your sleeves kind of exercise. You need to be staffed up for this stuff. This is not like just doing a deal, but it's also a lot of fun. And it's also, on a personal note, it's exciting to be able to be part of something that you have an impact on your community and be able to give back. So there's something that transcends just the deal and the project. It's also just nice to be able to participate in your community.
You revamped the train station there too, right? Was that new ground for you, beautifying a train station?
Yeah, in fact, I think what we did at Douglas has now become the standard for all of the metro stations in Miami. And it's interesting, like rebuilding a bus lane or a drop-off area. In many cases, it doesn't sound like much, but it changes the way pedestrians, flow in and out of properties. It changes the landscape. It changes the way that people think about the project. And so when we typically do these deals, typically the trade-off is we are providing infrastructure to the cities or the counties, and that's part of the bill of goods the bundle of goods that we provide. And then what they usually do is they provide the land on which we will develop, apartments or commercial or retail or whatever it is. And the other thing I wanted to just quickly point out is that the dynamics of these deals change. So you start off with one idea, and the end product, it could very well be different. But the key is that you want to deliver more than what you project and what you promise. You don't want to be the kind of group that under delivers, right? So you might be a little different, but you want to look back and say, hey, I told you I was going to do this, and I ended up doing either that or more than that and exceeded it, and that's how you end up getting more projects as well.
One of the critiques of public transit in Miami that I've heard, I'm not from here, but talking to locals the past couple days, is that the Metro Rail is great if you live near it and if you work near it. But do you think the fact that you were able to, do this development, and the fact that I believe there was a vote, like a straw poll a year ago, where residents said they wanted more, public transit options. Do you think that creates a runway to both build more developments near the Metro Rail and maybe expand it as well?
Yeah, I mean, look, there's no great city in the world that doesn't have public transit. And frankly, metros or subways are key and critical to that fabric. Miami is no stranger to that. I think we also have to remember Miami's a younger city, even though it's moving rapidly and it's growing, at a huge pace. It's still a young city. We have effectively kind of a 1.5 lines of metro rail right now. I think that at maturity, Miami is deserving of probably 5 or 6 lines of metro rail, including connectivity to the beach and including connectivity out west and other corridors. The problem you have today is, like you identified, Susanna, is that unless you live close to the metro, you can't access it because it doesn't connect. It doesn't have the connective tissue you need, as opposed to like in New York, where you jump off from the A line and you go to the 7 or whatever it is. So that's just a matter of time, but I think the way to do that is to generate density, because if no one's around the metro rail stations to use them, then you can't justify the infrastructure required to build them. So I think that's why, and I know that, listen, I've been living in Miami my whole life, and I don't love the traffic either, and I know that every time we build a building, people assume there'll be more traffic, and they're generally correct. But I don't think that's going to stop. So the way to handle the infrastructure, the way to handle the growth is to provide the infrastructure underneath it. So if you build a building, but it's connected to the metro, then, or to bus or to other systems of transit, then you can, generate, ridership, and you can solve one problem, by increasing the infrastructure around it.
Mm-hmm. Yeah, that completely makes sense to me. So widening it out a little bit, I can imagine that P3s might not be everyone's cup of tea. Do you have a lot of competition on those projects?
Yeah, we were talking about this earlier. I think everybody, it's a nice buzzword, like a P3, and it has just a nice ring to it. Oh, I want to do a P3, or I want to do a public-private partnership, until you actually start to understand the work involved. I always like to joke, when you start off with these deals, you show up to the first meetings and there's 20 groups that are interested, and then when you go to finally bid on the project, there's cases where you might be the only bidder, and then you look around and say, maybe I'm really don't know what I'm doing, because there's no one else here that wants this. I'm the only one that does. But oftentimes it resolves to a handful of bidders, and the reason for that, I believe, is because of the work involved in these types of deals, and you really need a serious amount of bandwidth to do that. The other thing is, these counties and cities have been burned by people in the past who have tied them up and gotten the deal, so to speak, but not delivered the product. And that's a really bad look. So, if you're a politician or a commissioner or mayor, here you are, you promised your constituents all these great things. You handed that responsibility over to a development team or an investor, and if they don't deliver, then it makes you look bad. And so it's important that these people deliver, and so that you have to be very careful what you promise and say. And I think what they're realizing now is, the groups that are actually doing this stuff and are delivering on their promises are the ones that have a higher likelihood of being trusted for the next ones. And so that's very important. And so we're very careful with that, because you don't want to promise something that you can't do.
Right. I mean, you pre-qualified for the City Hall redevelopment. I imagine that's because you have a track record, right?
Yeah, the City Hall, I think, was definitely an expression of that to a large extent. It's the natural continuation of what we've done. We built on that corridor. We built a project called Motion at Dayland years ago in partnership with the Adler Group, and then we also did Lincoln Douglas, and we're continuing that phase. And then City Hall happens to be the South Miami stations in between both of those. So I think it speaks to that kind of the legacy of those types of projects. And certainly we leveraged our experience at all those projects. Also the mistakes we made a a lot of mistakes. And so we very open about that, and we try to correct on those mistakes and say, how do we do it better next time?
What mistakes have you made?
I shouldn't have said that. Oftentimes you make calculations on what you think is going to happen. As an example, parking is a really, really interesting puzzle. And I think anyone in this room who has developed anything will agree that in a place like Miami, parking is oftentimes the biggest hurdle or the Achilles heel or the biggest thing to figure out. And interestingly, on a lot of these stations, you can build far less parking because the way that they're designed, they're in these zones that actually give you the ability to build less parking. But I think you have to also balance that with what the market will support. So, we all think of this great future of like robo-taxis running around and with driverless vehicles and maybe even flying cars. But that's really not the reality of what's going on today. People still like their cars. And when you're charging, $2,000 or $3,000 or $4,000 a month in rent for an apartment, it's kind of hard to tell someone, oh, but by the way, you can't have a parking space. So solving the parking issue has been definitely something we've done a lot of trial and error on. And I think it's not necessarily like a mistake. It's just more getting it right. So tweaking it. And fortunately, in our case, we've been able to build garages that can maybe leverage other buildings. So the same garage can actually feed 2 or 3 other uses in buildings. But certainly we take it pretty seriously because it's kind of hard to, once you build something, it's hard to unbuild it. And you can't rehab a parking garage. You know what I mean? Like you can rehab someone's kitchen, but you can't magically create parking spaces.
Okay, so City Hall. What does City Hall look like right now?
It's an older building. It's an older kind of 70s style building. It's not super kept up. We're talking about the South Miami City Hall. It also houses the library, a police station, and so this is a nice one because this is an area that is in need of a lot of infrastructure, and it's in need of a lot of density. Usually when you think about all the things you have to do, a lot of the infrastructure, a lot of developers will think about how to either hide or mask that in a way where it's kind of segmented off and tucked away to the primary use, which is the residential or the commercial. In this particular case, we kind of went the other way. We actually celebrated the City Hall building, and I don't have a picture of it. I could have brought one, I guess, but we put together a plan that actually highlights at the center of the whole community the City Hall, the library. We actually took one of their historic buildings, and we're going to turn that into a cafe. And so instead of hiding it, we said, no, let's actually make this the focal point. And I think the city really liked that, and I think that they felt like there was an element of pride. For me particularly, it's my backyard. It's where I've grown up, and I drive by every day. So I'm excited about the opportunity to make that impact.
I want to, at the risk of exhausting our chat about public-private partnerships, you do have a really interesting one happening in Greenville, South Carolina. So it's an old textile mill, and you're partnering with the federal government on that, right? Or you bought it from the federal government?
Yeah, this is a site in Greenville. It's on a trail that's actually kind of famous. It's called Swamp Rabbit Trail, but it's like their underline or their highline. And it was a textile mill just outside the city. And again, we bought that from the government. It's a partnership in the sense that there are tax incentives that come with the site. And that's going to be an opportunity to develop a kind of a town center feel to that area, and also create a pedestrian environment that the city can enjoy. Places like Greenville, even though it sounds far away, they're actually trending in very similar directions as places like South Florida. They are basically benefiting from this desire to live in a good climate, good business friendly environment, lower cost of living. And so we've identified that market as something that we think we can add some value to, and we're excited about that project. It's still a little early to tell. We're about to start breaking ground next year in the first quarter, so I'm excited to see what that one shows.
Yeah, I think it was a year or two ago, the Carolinas, I forget which, but we're drawing like the most residents or an incredible amount, So I could imagine you're looking at other opportunities around there.
Yeah, I mean, if you go to a restaurant in South Carolina, you'll say, "Why don't I live here? This is very much more affordable." It's like I could, it's pretty good living out there. Doesn't have the sex appeal of Miami, obviously, but very few cities do. I mean, we've been particularly harbored in many ways in Miami. I mean, I'm sure everybody in the audience is from a lot of different places around the world, but I think you would agree that Miami has weathered these storms in an unusually lucky way because of how fortunate we are for everybody wanting to be here. It's not like that everywhere, and there's some real pain out there. I think the Southeast has done better because people decided after COVID, hey, I want to live somewhere where my quality of life is better, and I can work from home, and I can lower my cost of living, et cetera. So yeah, I think that those same trends apply. Obviously, Miami is special. Mm-hmm. Yeah.
Yeah, I mean, the pain, I'm going to seize on that to talk about your distress fund. So you launched that, or you launched one early 2023, I think. And when we chatted, you said, there's not a lot of distress in South Florida, but I'm curious if you've identified any distressed assets elsewhere.
Well, I appreciate the question. I think, distress is like a buzzword, a little bit like public-private partnerships. The reality is we didn't really launch a distress fund. We just launched our next fund, which is an opportunity fund. And I think in that, somewhere in the paragraph somewhere, it said that we could target distressed opportunities. And I know that the papers like to pick up on that word. We started our company and our track record in 2007 and 2008. So we were at the epicenter of distressed investing, and that's how I got my start personally. And we were fortunate to buy a lot of assets for low prices, but I also was pretty exposed to, at an early age in my career, to how bad things can get in this real estate business because it requires a lot of money. And when there's a lot of money on the table, it means there's a lot of risk. And the reality is that it's a nice idea to buy distressed, but it's not a lot of fun to be in a distressed environment. It's a lot more fun to be in a growing environment. And so, fortunately, the last couple years, even though things have been maybe softer, I don't think we've seen like a lot of distress. Certainly not in Florida, in South Florida. There's been situations, but for the most part, apartments have performed, condos have sold. Our office market, as an example, is a complete outlier. I mean, we're the only market in the country, or maybe one of only one or two markets, where office is thriving, and yet, space is being given away at other places like, so many other major cities. So even in the sectors that you would think would have distress, we've actually been pretty resilient, and our friends in the office business, I think, could attest to that. So long way of answering your question, but we didn't really see as much distress as we had potentially anticipated, but it doesn't change our outlook. It's better this way. It's better to have saved capital to invest in opportunistic growing markets than it would have been in distress. The other quick thing is that when I started my business, I had nothing to lose. We had no assets, so it was easy to buy distressed deals because there was nothing to give up. Today we have a lot of projects, a lot of assets, so distress would also affect us too. We would be part of that, and so it's not like you can't have it both ways. So overall, we're definitely never rooting for a distressed environment, but certainly if it comes up, we'll be ready with capital to invest and to hopefully redeploy in our market.
So let's go back to multifamily in Miami. One of the critiques is that overbuilding in the city, but you have, I think you told me, a dozen multifamily projects underway. So what's your take on that?
Yeah, so I mean, oversupply is a constant concern in the multifamily business. I personally am not concerned with oversupply in strong markets because of a couple factors. Number one, demand is always stronger than supply in markets that are growing. So people want to be down here, and more people that are here makes more people want to be here. And ultimately, there's nothing more powerful in any business. The most powerful factor is always your revenue, and revenue is basically another word for demand. So as long as we still see people wanting to be here and come down here, I think that is more important than the supply. The other factor is you have a situation where in the last couple years, it's been hard to develop projects, and there has not been anywhere near the same amount of starts per year as there used to be. So, I mean, Wynwood actually might be an exception. There's a lot going on in Wynwood where we are, but for the most part, if you look at like the Coral Gables, the Durals of the world, even Brickles, et cetera, if you remove the condos from the equation, because that's separate business, if you look at only multifamily, there's actually been kind of a historic low of starts. So that means that in the next several years, I think we're going to see very few deliveries. So if you're able to build an apartment project today, I think you're going to be in a fortunate position in the next couple of years to deliver in an undersupplied environment. The last thing I'll say is that people want to live in nice places. I mean, like, it doesn't matter whether you're a student at college or whether you're just starting off or you're an empty nester or you're building a family. People want to live in things that are newer, that are nicer, that have amenities. What we've seen is people will trade out of, even a larger apartment somewhere that's, in an older property for a smaller space and a newer property, but there they have access to, amenities, retail, pedestrian, transit, like we said before, and we've seen that gravitational push. So I think that those who are building new projects will get like that they'll benefit from that trend. That said, it's still risky, and you have to be very careful in what you're building. And it's the development business is a risky business.
How have you gotten deals financed? I mean, you mentioned it's been hard, so how have you done that?
With a lot of difficulty. I mean, I think we just take it slow. We take it one step at a time. Our view is, you don't want to push. You don't want to fight the market. So even if you have the money, the classic developer will do. They'll just start building if they have the capital for it. But you have to be really. You have to listen to the market. If the market is telling you when interest rates were rising and the capital markets really tightened, that was a sign that you have to really listen to. So what we typically do in markets like this, the last couple of years, what we've done is we've really worked hard to really refine the projects. I'll give you an example. We've taken high-rise deals that are expensive to build and turned them into mid-rise deals or even less density. And people say, what do you mean? Why would you cut your density in half or something? And the reason is because we're trying to lower cost. And so we've made moves that have actually gotten like conservative moves along the way to bring down our cost, value engineer the deals, and get them off the ground. And just like in an expansionary environment, we may make opposite moves. We may add density to projects. So I think that's what our job is about. We need to always be thinking not just in the world of the finance, but also the world of the operations and how could we be adding value. It goes back to the first point about where could we add value in the things we're doing rather than just only looking at the financial stats.
Okay, and one last question because we're running out of time. But you have your hands full right now. You have a lot going on. Are you looking to do more in 2025?
Always, absolutely. That's just part of the game. You're always looking to stay active and be busy. We run capital for various institutions, families, high net worth and low net worth individuals. We take that job extremely seriously, and the rule number one is to not lose money. And that's and every other rule after that is kind of a version of rule number one. But of course, people invest in us to be active. And so we're always looking for great opportunities, but we're also trying to be very careful because we are fiduciaries to people's capital. So the answer is yes, but it's always a tempered yes.
All right. Thank you so much.
Thank you.